Hello, good evening and welcome to Business Live. Coming up, new World Bank report warns critical development remains at risk if enough is not done to improve revenue mobilization as it pushes for all tax exemptions. We will be discussing the report. Also in this bulletin, Ghana Statistical Service collaborates with key telecommunications companies to advance the use of data for policy purposes.
But it's important we appreciate the internal mobilities that frequently happens either on a monthly basis throughout the year and inform policymakers on how these mobilities influences the decisions that they take.
Plus, Ministry of Food and Agriculture launches Irrigation for Wealth Creation to construct irrigation facilities in all 16 regions of the country.
Grain-fed agriculture can never guarantee food security. It is against this background that we have decided to roll out an important program called Irrigation for Wealth Creation.
We have details of this and more lined up for you. Please stay. Thanks so much for your time. I am Pius Kojobaka, and looking at our stories, improved revenue mobilization is needed to help the country meet its critical development needs in the coming months. That's a new warning coming from the World Bank. There is more in the following Business Desk report.
The World Bank in its Public Finance Review report was worried that, despite various reforms undertaken by government over the past years, Ghana is still struggling among its peers when it comes to raising the required revenue and taxes as a percentage to GDP. The report revealed that Ghana's domestic revenue mobilization has declined in recent years and remains below its peers. For instance, collected revenue as a share of GDP declined from 15% in 2017 to 13% in 2021. The World Bank also raised concerns about other tax contributions to revenue had declined as a result of tax exemptions. It also believed that the way taxes are collected in the country needs to be reviewed, especially when it comes to the associated cost and its impact on the overall revenue mobilization.
And on the back of that, the World Bank is also making some recommendations on how to deal with the revenue shortfalls. And I want us to have a read about it. Let's get onto my touch screen as we have it. Accelerate revenue mobilization efforts, closing both the policy and compliance gaps. Now, the World Bank number 1 says medium-term revenue strategy, which it says is timely implementation for the medium-term revenue strategy with appropriate revenue administration measures. It goes on to say you have to do that by removing VAT exemptions and also reforming the CIT by phasing out tax holidays and exemptions and strengthening safeguards against profit shifting and reducing customs exemptions on that score as well, also enhancing the progressivity of PIT. Now, the second point the World Bank is making is that we need to strengthen our tax administration and improve compliance as well as broaden the tax base. Now, he explains that to ensure the Ghana Revenue Authority cleans the taxpayers register and ledgers, complete the installation of the Integrated Tax Administration System known as the EITAS. Now, it concludes by saying there is the need for us to apply the Tax Exemption Act 2020, which ensures the steadfast implementation of the provision of the Act, notably those related to reporting to Parliament, publication of tax exemptions, as well as the periodic review of exemption regimes. And we want to make sense out of these recommendations issued by the World Bank. Let's get onto Zoom and speak to tax consultant Francis Timoboy for more analysis on this subject matter we are talking about. Thanks so much, sir, for agreeing to speak to us on Business Live. I guess you may be worried about the latest findings coming from the World Bank. Are you?
No, Pius, because I think these things, we know them. We are aware of them, that we've not been doing well in terms of our revenue collection. So it is just a rehash of the existing problems that we have. Pius, you and I know when it comes to tax collection, which it's measured by the tax to GDP, if you don't have enough natural resources, Ghana is not doing well. We are falling behind all our peers. So for me, we are aware of the tax compliance. We are aware of the taxpayers register. In 2021, when we say we're rolling the Ghana 10, the Ghana card with the existing 10 We did it, but we were saying it was not going to automatically increase tax revenue. So these are problems that we are aware of. The taxpayer system we have in Ghana is just geared towards some few people, and that is why we see most of these taxes introduced in the form of indirect taxes. Again, they are also doing well. So it is something that we are aware of, but maybe with time we will overcome.
With time, we will overcome, you say. But I do remember the number of times we've had this conversation on tax matters. And again, I will pose this question to you. Why haven't we been able to, deal with our revenue mobilization challenges?
So, Pius, we have a chronic tax compliance problem. I'll say chronic because you look at the direct taxes that we have in Ghana, very few people pay. We have a large informal sector who don't contribute any direct taxes. So the only way we do is, indirect taxes. Again, the tax administration system that we have in Ghana, consistently, we either bring this tax on board, we pull it off, look at the benchmark revenue, we pull it off, we bring it, and then we pull it off. The VAT cascading effect. We have had businesses complain that it doesn't augur well. So at the end of the day, you think that you are raising money in the form of indirect taxes, but then you are eating into the other forms of taxes like direct taxes. You and I are in this country, property tax, we start and then we abandon it. So we have multiple challenges. And I think that until we're able to sit and then, find solutions to it, we're going to have these problems. The tax administration system in Ghana requires revamping.
And when you take a critical look at the report the Bank of Ghana is issuing, it is pushing for a removal of all forms of tax exemptions. And I'm wondering whether that is feasible.
It is, because before the parliament that ended recently, you recall the amount of exemption that some companies were seeking. But over the period, our tax exemption alone contributed about close to 4% of our GDP. Meanwhile, total tax to GDP is just around 14%, far, far, far below countries that you are even supposed to be described as better. Botswana and then Chad are the companies that we are, within the ranges with. Of course, Nigeria is they have enough resources. So when it comes to tax to GDP ratio, we say that they have some amount of resources. Globally, you are supposed to get a minimum of 15%. We have never crossed that. It is in 2024 that, looking at the GRA report that they have released, I'm told that if you do the calculation, we have jumped to 17%, which is a very fantastic measure. So we need to do more. We are not doing well when it comes to the tax collection that we have in Ghana. I mean, you cannot be compared with countries like Chad when it comes to your tax collection.
And can the GRA be blamed for that?
I think not. Over the years, if you study the way government has behaved, we don't invest much in our tax system. You need to put in money in order to recoup. So in terms of system, it's recent that we have seen some digitalization of the administration system, and you can see that it's yielding. If the GRA collection of 153 billion that we are seeing in 2024, it means that they jump close to over 40%. So that is very good. It means that if we invest more, we can get more. We need more of the tax system to come on board. Again, the policies that we bring, we just have to look at it in a very long term before we implement it. We can't be bringing tax policies very short term and then we pull it off. So we can say to some extent, GRA needs to do more when it comes to compliance, but government must also be blamed for some of the investment and the policies that they bring.
Mr. Timobo, do you think that this development might make it difficult for government to press ahead with proposed tax cuts in the 2025 budget?
Pius, we mentioned that if the government does not seek alternative, the e-levy and then the COVID-19 alone will give us over 6.4 billion cedis. So obviously, if reforms are not taken immediately, and for me, focus should be on compliance, we're going to struggle a little bit, especially now that some countries are withdrawing their aid. But I'm happy that the current minister indicated that he is not interested in introducing new taxes. He is more focused on bringing on board the compliance measures. let's enforce the existing taxes. By doing so, we're able to, encourage other companies to also, comply. We need a full compliance to, especially the taxes that we've neglected. Go to property tax. Let's look at the other direct taxes that we normally talk about, the informal sector. Let's look at how do we even implement the holistic taxes that we have in our laws. I think that if we do that, we'll be able to, back up the gap that we have created. And the exemptions, I agree perfectly. And I'm happy that the minister said that they are going to review the exemptions. We need to take a holistic review of it. If the exemptions are not bringing in the required returns, why give exemptions? It is more like an investment. We give away the taxes. We must recoup it maybe in 2 or 3 years. We can't be doing, for that Christmas with our taxes.
Francis Timoboy, thanks so much for your input at this very moment. We truly appreciate it. He's a tax consultant speaking to us here on Business Live. Now, the 2025 Banking Sector Outlook Report has shown that Ghana's rising public debt and high interest payments will continue to constrain government finances, consuming a significant portion of total expenditure. While debt restructuring in 2023 provided some relief, projections for 2025 indicate that debt management challenges persist. Joy Business's Winston Taki has more in this report.
According to the 2025 Banking Sector Outlook Report, Ghana's rising public debt and interest payments remain a major concern, consuming 30.9% of total government spending in 2022, though this dropped to 24.4% in 2023 after the debt restructuring. These fiscal pressures are affecting the banking sector, particularly through liquidity shortages caused by heavy government borrowing. This restricts lending to the private sector, slowing economic growth. Rising debt also raises the risks of government default, threatening banks holding large amounts of government securities. Despite the risks, opportunities still exist. The government's digital tax reforms under the IMF program creates new prospects for banks to support tax collection systems. Additionally, Ghana's focus on clean energy and climate initiatives presents opportunities for green financing solutions. The report states that the bank's ability to adapt will shape Ghana's economic stability and financial resilience in 2025.
Hello again, welcome back to Business Live. Government statistician Professor Samuel Kobnenim has emphasized on the need for strategic partnership with key stakeholders, especially in the telecom sector, to advance the use of data in making efficient policy decisions for national development. He made the remark during a stakeholder engagement here in Accra. Here's a report.
A stakeholder meeting on advancing statistics through partnerships brought together representatives from Ghana and the UK to discuss effective technical collaboration aimed at enhancing the use of data for national policy decisions. Government statistician Professor Samuel Anim highlighted the progress made in leveraging data from telecommunications companies to track internal mobility patterns in Ghana.
This can be used in so many respects, and what we've demonstrated today is to get a better understanding of how that affects internal mobility. As we are all aware, Ghana Statistical Service has computed population projections from 2022 to 2050. These population projections would be static over this period, but it's important we appreciate the internal mobilities that frequently happens either on a monthly basis throughout the year, and inform policymakers on how these mobilities influences the decisions that they take.
Chief Statistician and Deputy Director at the Center for Data Analysis, Shen Rasdal, shared insight on the role of data-driven decision-making.
The way that we're able to do more with data and be better with data and get the right data in the right place at the right time is by really building partnerships and exploiting the whole range of data that is available. For the UK government, partnerships like this are exactly the way that we want to be delivering. And in particular, those partnerships that are working across all of the UK's assets.
Deputy Director for Health and International Partnerships at the UK's Office for National Statistics, Dr. James Tecker, expressed optimism about sustaining and expanding the collaboration with Ghana.
I look forward to extending our partnership with the Ghana Statistical Service, which has been so fantastic over the last 6 or 7 years. And some of the work that you're doing is just hugely innovative. This work with mobile phone data, it's truly world class.
The meeting culminated in the signing of a memorandum of understanding between the Ghana Statistical Service and the UK's Office for National Statistics.
Let's now touch on one of our headline stories. The Ministry of Food and Agriculture has launched the Irrigation for Wealth Creation program to build irrigation facilities in various regions in the country to reduce dependency on rainfall agriculture. Speaking to the media, Minister for Food and Agriculture, Eric Opoku, said the project will help increase agricultural production of raw materials to feed industries for continuous production under the 24-hour economy policy.
The Irrigation for Wealth Creation project, which is expected to be completed within 12 months, will commence its first phase in 8 regions. The initiative is expected to boost food security, create employment, and strengthen the agricultural sector by providing consistent water supply to farmers. Speaking at the launch, Minister for Food and Agriculture Eric Opoku emphasized that the project is designed to enhance agricultural productivity by ensuring a stable supply of raw materials for industries.
So all our economic policies will be revolving around agriculture. And as you are all aware, agriculture in Ghana is basically rain-fed agriculture. And rain-fed agriculture can never guarantee food security. It is against this background that we have decided to roll out an important program in the agricultural sector called Irrigation for Wealth Creation. Our hope is that if we are able to provide more irrigation infrastructure, we can ensure all year-round production to sustain the businesses and to create jobs for the teeming youth of our nation.
He also indicated that implementation of the project will begin after the approval of the 2025 budget.
Immediately after the approval of the budgets, the contractors will have to be engaged for them to move to the field. Now we don't have the approval to spend. So what we can do is to generate the relevant information in preparation towards implementation. So as soon as the budget is approved, we'll then start the processes of awarding the contracts for the contractors to move to sites. Farming in Ghana is seasonal. It's seasonal because it is rain-fed. We depend solely on the weather. If the vagaries of the weather is not that favorable, you see our farmers weeping. They lose all their investment in agriculture. And we want to reset the agricultural sector. We want to change everything. So now we want to wean ourselves from rain-fed agriculture to irrigation-based agriculture, where the farmers can farm throughout the year.
The Minister of Food and Agriculture also urged the regional ministers to facilitate the acquisition of lands for the implementation of the project.
Let's stay longer within the agricultural sector. The Africa Development Council has urged the government to hinge the 24-hour economy policy on agriculture and manufacturing. That approach is stressed would boost productivity, create jobs, and strengthen Ghana's economy. The council said this at an executive council meeting.
The Africa Development Council is a non-profit organization that promotes sustainable industrial development in Africa. The ADC works with a variety of stakeholders, including African government, businesses, civil society organizations, and international partners. Dr. Prince Kofi Klugeson, speaking to Joy Business at the Executive Council meeting, stressed the need for a strategic plan to achieving economic stability.
Most of the organization and has all been based on political development, but it has done something to provide the independence for the countries. But what happens after the independence is what we are all fighting and lagging behind. So African Development Council tend to tap into the various countries and try to remove barriers, that prohibit trade, prohibit development, prohibit governance for the country. If you look at Africa, the major problem in Africa, we hear about the Sahel and all these issues, Ghana, Galamsey, and all of these. They are not Galamsey or Sahel as we hear it. It's our business. It's a private sector. People are seeing something that we, the Africans, are not seeing. So they come here, and go there, and then take our gold, our diamond away, and take our children.
On their spot, President of the Africa Development Council, Engineer Dr. Bright Achusogbe, advocated for policies that support industrial development in Africa.
To make a change, there must be carriers of change. And who are those carriers of change? The think tanks, the associations, the SCCOs, and co. There must be, they are the carriers of change. And in Africa, there must be a particular or specific think tank that will lead the way in order to change the mindset of us, and then also let the people who want to exploit Africa now know that it is time.
The mission of the Africa Development Council is to build the capacity of African businesses, government, and civil society organizations to participate in and benefit from industrial development.
In a significant step to strengthen its relationship with the Ghana Traditional Authority and the Ghana State, the leadership of GCB Bank PLC has paid a courtesy call on the government chair to formally introduce the bank's new managing director, Farihan Al-Hassan, to His Royal Majesty King Taki Taekuchuru II.
Managing Director of GCB Bank, Farihan Al-Hassan, led a delegation to pay a courtesy call on the government chair, His Royal Majesty King Taki Taekuchuru II, at his palace in Accra. The visit aimed to introduce the bank's new leadership and reaffirm GCB Bank's commitment to continued collaboration with the Ghana State.
We've got over 30 branches in Accra alone. And it's just fair that before I start work, I come to seek his blessings and to introduce a new leadership team to him. Anything they're involved in, we have to get involved in. This is a very wise king. You would see him talking about women education, girl child education. You will see him talking about health. And these are things that we think that are very important for the sustenance of the community that we operate from. And so you'd see us support him in all the initiatives that he intends to embark on to support the Ghana State. Our mission is to support the economy of the local economy. And so obviously we will drive economic growth through supporting the real sector of the economy, and you'd see GCB play a leading role in that regard.
The government chair expressed his appreciation for the visit and assured the delegation of his support in creating an environment where corporate institutions can thrive and contribute to economic growth.
Today is a special day because my brother has come to show love and affection to this house, and the honor you bring to this house, we are grateful. We receive you absolutely and pray for credence and God's guidance on your stewardship for the Ghana Commercial Bank. I believe that in your tenure, the bank will be transformed to another level, and that you'll be able to hold our city in support with other banks and even the central bank.
During the visit, the GCB delegation presented customary items to the government chair as a sign of respect and partnership. They also announced 100 Ghana Cedi seed capital commitment to support projects under the government chair foundation, reinforcing their dedication to community development.
And that's our package by way of Business Live. We have more stories for you when you log on to myjoyonline.com/business. AG's department advised Godfrey Dame to drop charges against Dr. Johnson Isiama. That's according to Dominic Ayini, revealing the lack of fiscal discipline plunged Ghana into full-fledged crisis in 2022. That's according to the World Bank. And Fair Wages Salaries Commission collaborates with GAEC and RA to improve working conditions. Also, AG's department, and that was what I read earlier to you, Tony Elumelu Foundation UAE partner to empower 1,000 young African. More stories when you visit myjoyonline.com/business. See you at 8 p.m. with Prime Business. Pleasure serving you.